What is going on, Lucid fans? Welcome back to Financial Journey. So once again, we got another interesting day in our hands. I do want to talk on the massive ramp up that Lucid is doing for deliveries, what that means for us as investors, and just generally speaking, how far can Lucid go down? What is the worst? When is this all going to end? I'm going to be talking about hypothetically some things that could cause us a nice little reversal from this point. Before I get into any of that, making sure you guys hit that thumbs up and subscribe is always greatly appreciated. And with that, let's get right to it. Live ticker is going at the very bottom of the screen, almost down 6.5%. 4.6 million for volume, 18.9 is the average, and 310,000 shares being purchased by institutions today on the secondary market. So that's definitely a little bit lower than what we are expecting. So one takeaway as of right now from this is that big money isn't buying the dip. Even more so looking at the institutional purchasing on the dark pool, very, very low from what we are used to. So again, depending on how you see that, that might be a good thing, bad thing, I don't know. I'm not a financial advisor, so do your own due diligence at the end of the day. News came out today, like I've been saying in previous videos, GDP, this is either going to go very right or very wrong. Even I did say if it comes in line with the expectation, which it did, then unfortunately the market's going to take that as a very big negative. Outside of that though, there's also the jobless claims was a little bit better than expected, and Bullard did actually talk where he said ultimately that they're going to be having and needing higher interest rates for longer, even more so what was already previously anticipated. So again, out of everything I just said, nothing is good. So that's my own 2 cents clearly on that, with the exception maybe of if you want to call the jobless claims good. But unfortunately, the next thing that I think could cause us a nice reversal from this downtrend that we are on is the next CPI data. So even you can see on this chart right here, it's very scary. It's looking very similar to the kind of this scenario where they ultimately raised rates very, very high, but unfortunately that didn't bring down any inflation, just caused and started a recession to some degree. So when it comes to it though, the next CPI data is coming out on October the 13th. So in reality, I personally feel that is going to be the next form of data that could cause us a nice reversal. That's my own 2 cents. Clearly, this is only for entertainment purposes, as you guys are already aware of that. So in reality, I think CPI or positive CPI data might be the only saving grace. So keep that in mind that it's roughly about 2 weeks away from here. So definitely not the best thing. So as I always like to do, this whole channel was created to make better investors. So as I've given warnings roughly about 2 months ago and so forth, if you are trading on margin, be very, very cautious. We could be going down very fast, very aggressively, especially like I said, the next possible saving grace is CPI, which is 2 weeks away. So a lot of good things or bad things could come in that 2 weeks. So depending on if you're averaging down or so forth, make sure you guys do your own due diligence. And if you are doing options, be very cautious about doing covered calls. Obviously you can just roll it over, and if you guys don't know options, highly suggest in researching them. But typically on a downtrend, you don't really want to do covered calls, especially if you are lower than your actual average. So that's something I've definitely learned as an investor. And as I always say, I like to teach you guys my mistakes that I've learned over the time period. So with that though, there was a very positive thing coming out from Bear's Workshop, 11 car haulers. So as you see right here, I am playing this in the background. So in reality, that's a very, very big thing. It hopefully mimics exactly that rumor about possibly 40 to 50 vehicles per day, insinuating roughly about 1,000 vehicles a month. So I think this is a very exciting time for Lucid. And as I've always said, that's been one of the only negatives of Lucid is reality is just the production. So take that how you see that. Like I said, institutions are really taking a step back and it's very noticeable. But looking at some of the technicals though, I have the 50, 100, 200-day moving averages, Bollinger Bands, RSI, stochastic, and momentum. Like I've been saying over the last couple of videos as well, number of retail investors have been really holding their position. So that's definitely a very good sign, as you can tell based on the momentum indicator. Stochastic, we are very oversold at 21. We still do have that deviation, black line above the red, showing a nice bullish trend is wanting to form at least. RSI is currently at 40. We unfortunately are still low percentile of the Bollinger Band, but we do have a little bit more of a gap to drop. So hypothetically, we could drop to $13.60 without the next big support level. So that is why I said be very cautious with margin, because typically a lot of these growth stocks, when they go down, they could go down very, very fast and very aggressively. So just keep all of this in mind. When it comes down to it, in the grand scheme of things, years from now, you're going to look back and wish you bought at these levels. Obviously, this price might not necessarily be the bottom, but nobody can tell the bottom. It's one of those things, if you're ever trying to chase the bottom, it's a losing game. It just sucks in the grand scheme of things. What you need to do, find a good company that has a good balance sheet and so forth that could survive in a higher interest rate environment, as what Bullard said, for higher and longer, but still. Find a good company, invest, and continue to monitor it. Just do your own due diligence. And in reality, I think Lucid is that company, like I said, especially with them ramping up production, definitely has a lot of good attributes that definitely could bring in a lot of good investors. So that's my own 2 cents clearly on everything. Just want to give you a quick update on some short interest as of right now. Currently, they are increasing 1.77 million shares, works out to be 1.31% up. Total short interest is 23.04, so we're definitely getting up there despite cost to borrow going down. So a little bit more of an abnormal time. Like I always say, cost to borrow and short interest are usually inverse, and this is a very good indicator of that exact same thing. So cost to borrow is going down, so 9.54 has typically been around 11, possibly a little bit higher, around the 15 now in cases. So this is why, unfortunately, shorts are really doubling down, taking advantage of all this fear. But with all that, don't forget to hit that thumbs up and subscribe, as always greatly appreciated. Let me know your thoughts if you think that it might not necessarily be CPI data that does save us, or if there might be some other economic event that does cause us to go up. Let me know your thoughts on that in the comments below. But like I said, most likely it will be around the CPI data. Could be wrong though. So like I said, don't forget to hit that thumbs up and subscribe. And if you do like my channel and support the growth, take a look at my memberships, link in the description below, or just hit the join button at the bottom of the screen. With that, I appreciate you guys watching, and let's all make a lot of money on Lucid.